Hello, everyone, and welcome to Spark Insights. My name is Charlotte Reeves, and I'm Sustainability Governance Manager at the London Stock Exchange Group. In today's session, we'll be exploring the evolving landscape of sustainability reporting under the ISSB IFRS S1 and S2 standards. Right now is a pivotal moment in the sustainability reporting space, as we're seeing rapid shifts globally from voluntary frameworks to mandatory sustainability disclosures. Since the IFRS released its first sustainability standards back in 2023, more than 30 jurisdictions are reviewing or adopting them. And at the same time, the EU is also reassessing the scope and timing of CSRD, or the Corporate Sustainability Reporting Directive. With so much change happening, it's easy to see how organizations can feel lost in the complexity of technical requirements. But amongst all of this, it's important we don't lose sight of the bigger picture, that sustainability reporting is more than just a compliance exercise. Done well, it can also be a really powerful tool, helping provide opportunities to organizations to identify operational efficiencies, gain strategic insights, manage risks, and improve access to capital. I'm delighted to be joined today by a fantastic panel of industry experts who will be sharing their perspectives on market trends, regulatory developments, and digital innovations in this area. So this feels like an opportune moment to hand over to our panelists to introduce themselves. So Mary, if I could start with you, please.
Thanks, Charlotte, and thank you so much for having me on today. Hi, everyone. I'm Mary. I am the Strategic Partnership and Alliances Manager with ARC. We're a company that provides a lot of solutions in the world of statutory and regulatory reporting. So IXBRL being one of those solutions, which I'm here to talk about today, the digital reporting side that is coming down the line for ESG. We also offer a financial automation platform that will cater for things like operational transfer pricing, and Pillar 2 coming down the line, your VAT reporting. My role within ARC as the Strategic Partnership Alliances Manager is that I work very closely with our partners, very happily being joined by two of them on the call today, both Anne from ESG 360 and Thomas Verdon from his role in BM&A. So we work very closely with our partners to ensure that our clients have the best product going to market, that they are ahead of the game, that they're not just meeting their compliance and regulatory needs, but they are doing what is best practice in the market. Thanks, Charlotte.
Thanks, Mary. And now, Anne, over to you.
Thank you very much. Just echoing Mary's sentiment there. So it's great to be on this panel. Thank you very much for inviting me. My name is Anne Chada. I'm the co-founder and CEO of ESG 360. We are a technology platform working with large multinational companies, financial institutions, and looking at mapping value chains and ESG risks and opportunities across the business. And we now have released a tool last week, which is called ESG 360 Air, which is a fully AI integrated tool looking at how the existing disclosures can be turned into the IFRS S1, S2 disclosures itself. And this is kind of our flagship product. And the reason we have devised this because, as Mary is echoing and Charlotte, as you said, there's a very complex landscape out there. So our role is to demystify that for large companies. And we are a Glasgow-based company. Yeah, thank you very much.
And last but not least, Thomas.
Hi, my turn to thank you for having me today. So I'm the chair of Expel Europe, and Expel Europe is a non-profit organization within the Expel International Consortium, and it brings together businesses, software providers, consultants, and auditors as well, to focus on the use of the Expel technology for corporate reporting across Europe, and discover things like companies submitting their accounts to the business registers, like Companies House in the UK, tax filings, but also consolidated IFRS accounts, those known as ESEF or UKSEF, and no sustainability reporting as well.
Great, thank you, Thomas. And now, just before we get going, a quick bit of housekeeping. Today's session is being recorded, and so if you'd like to revisit anything at a later date or share the webinar with any of your colleagues, the recording will be available on Spark Insights as a video on demand following the session. It is designed to be an interactive session, so we really encourage you to ask questions. You can do that using the Ask Question option on the right-hand side of the video player on your screen. Those questions will come through to me, and I'll present them to the panel during the Q&A section at the end. So thank you for joining us all today. And with that, let's get started. So firstly, to set the scene, what are some of the current ESG reporting trends and challenges that you are each seeing currently? And I think I'll open that up to the panel, but perhaps we could start with you, Ange, on this one.
Thank you very much. Just a very timely discussion. I mean, talking about ESG reporting and challenges, you can see what's happening with the kind of CSRD with Europe. It's going to be now called Omnibus, but there are a lot of solved issues around the double materiality, the context, the implementation, and then you have obviously there's the US. I was reading yesterday morning that SEC has decided to completely exit the IFRS sustainability group. And they've, exited the US, the NGFS, the Network for Greening the Financial System. So we're seeing, a major changes. But overall, companies we're working with, I think there is a pragmatic approach being taken that this is not a tomorrow's, yesterday's issue. This is a medium to long-term issue. And as we know, the climate issues are not going away. They get bigger by the year if you look at the climate science, obviously. And secondly, I would point out is the development of IFRS S1 S2, particularly for someone like myself who works with this large organization. I really welcome that because, Charlotte, as you pointed, there are 30 countries who have now set jurisdictions who can implement. And I think investors are really crying out for this sort of comparability of data across jurisdictions. Otherwise, we have, all the narrative reporting, which does not give you the decision useful information. So I think at one stage, I'm seeing a massive political impacts of different things. Although if you scratch under the surface, even, the administration in the US are saying they're against kind of ESG and everything. But if you look at, they recently approved a 780 million loan through the IRA, the Inflation Reduction Act, to a sustainable aviation fuel company in the US. There is a lot of emphasis on critical minerals. So I think what we're seeing is the language is changing and there is a maturity sort of appearing in these kind of frameworks and reporting needs. So I think for companies, it looks like very, very complex, but I think in the end, there is a clear sort of mandate by the investors and stakeholders to sort of, keep your head down and take a pragmatic approach. Thank you.
Thanks, Ange. And Mary, perhaps could you share some of your trends and challenges?
Yeah, of course. It's been quite interesting, I think, with ESG. So I've worked at ARC for about 9 years. So I've worked in the world of XBRL reporting for the same time. And what we found with our clients, and we work with tens of thousands of clients on an annual basis, is that when a new reporting mandate comes into play, people will comply to it when they have to and not beforehand. We've seen a very different trend with ESG reporting. And of course, when it comes to digital ESG reporting, there are numerous standards in which you can comply with. You've CSRD or ESRS in the EU, we have ISSB that'll come into play in the UK, and then we have GRI. And it's been very interesting. I think this year to date, with little or no kind of active approach in the market, we've had tens of customers coming to us saying, can we do something on the digital reporting side? Can we get ahead of the game? They're realizing that it's not just stakeholders using or not just regulators using these output reports, but stakeholders using them. Investors are looking for more accessible reports, and to get that, you need digital reporting. In particular with we'll come into AI further in the conversation, but with more technology using AI to extract information from reports, having that stricter data behind it certainly leads to further use of XBRL reports. So it's been interesting, I think, when it comes to ESG, that there definitely seems to be an appetite in the market to do some voluntary reporting. I'm sure, Thomas, you're probably seeing similar on your side.
Thomas, good to get your thoughts as well. I think you're on.
Sorry. I got mixed with my mute. Thank you, Murray and Charlotte. And as chair of Expert Europe, I indeed see the ESG report as well as a trend for digital reporting, an extended trend that also includes or has already included a big change for financial report, and now is going with sustainability information or sustainability data from the companies. And as the idea is to tag each piece of data, not only numbers, but also text. And that's really to make this information easier to use, compare, check accuracy, knowing we have no common standards to compare this data or to understand this data, and without the need of re-entry or risking mistakes. And as Mary pointed out, the system allows to have every piece of data identified uniquely. And we use a structured dictionary like the ISSB taxonomy that is prepared for IFRS S1 and S2 standards. And I would say that in that approach, members of Expert Europe, such as ARC, play a big role in choosing the data or labeling the data so everything would be understood. But digitalization of the reports, and especially of the sustainability report, was far from an expert taxonomy. So there is a global trend for moving from a report designed to be for paper reading and going for to be viewed on a screen or even used by machines. And Mary told about artificial intelligence, so it's quite important. And so my feeling about the long-term trend is that a digital report isn't just a tagged report or a structured report. It's a fully new way to report the information and to read this information. Whatever are the standards that are now developing, there is also a new standard, which is the electronic approach to read it. Thanks.
Thank you. I suppose just getting a bit more specific on the impact of ISSB, maybe a question for you, and how the landscape of sustainability reporting evolved under the new ISSB IFRS S1 and S2 standards? What makes them different to other sustainability standards?
I think you can see my slide on the screen here, so I thought I'll take an opportunity to put some context in it. So as you say, IFRS, given they are, setting the financial standards, accounting standards of the world, mostly, except obviously GAAP. GAAP is quite similar, but, around the world, including Europe, uses IFRS accounting because that provides a common baseline across the business for investors and institutional investors and stakeholders to see what companies are doing. So the goal of IFRS has always been to provide one language people can speak with and people can understand. So for a good reason. So the same methodology is being applied to the IFRS S1, S2, S1 being the sustainability, risk and opportunities, and the S2 being climate focused specifically. So, and TCFD has been integrated fully into ISSB, as probably the people who are listening will know. The preparers and the issuers will know that. And secondly, there are over 300 requirements altogether in IFRS S1, S2. There are lots of commonalities. So we've done some, analysis, quite deep analysis for ASU 60 Air, and we're obviously deploying the AI tools to do a lot of this stuff. And we can see across those two, there are 196 requirements individually, because a lot of the S1, S2 requirements kind of overlap. The main difference is, if you think about TCFD, it was very much guidance. It was narrative based, and as you can see, I think Mary, you would know this from a digital tagging, there was lots of narratives being reported. Here, the emphasis is on much more granular details of that TCFD implementation. And then you've got the industry metrics of the SASB, the Sustainability Accounting Board, which is obviously, UK government, and we'll talk about that, may not implement this year. But what you're seeing is a clear mandate to report on specific items, just like financial accounting. So in ESG reporting, in this case, becoming like financial reporting, it creates it's a new challenges and opportunities for organization. Because financial reporting is very much quantification of data. Here we're talking about, very much qualitative and quantitative. And this information does not sit with one department, so-called ESG or sustainability. This information, in our experience, is sitting across the value chain of the company. It's sitting in the risk areas of the company, in finance, in risk and audit, as I kind of mentioned, value chain, supply chain, manufacturing. So you literally need a system to go in and connect these stakeholders together to be able to have a meaningful disclosure, which an organization, a large listed organization, is confident with. And I say confident is a must, because once it becomes like financial reporting, you have to go for external audits. And in that sort of, sense, if you're getting an external audit of financial reporting, you understand how much, granular you need to be. You cannot have simply an ambitious sort of disclosure. It needs to be very much kind of fact-based. So I think that's the kind of main change. And I think, as I said before, I quite welcome it, because it's at least providing organizations a clear mandate on what to do and what to report upon. Although I must highlight, IFRS does not prescribe, whether you must do this sort of scenario and how you should decarbonize your business. They emphasize that's for the organizations to just like, when you're declaring revenue in financial reporting, you need to work out your own revenue. They're not going to tell you how to calculate your revenue, although they're giving some guidelines around it. But at the same time, they are very keen for organizations to be very clear on these things. So even if you're making estimates, you need to be much more clearer on how these estimates are made. So you've got to provide some methodology. So as I said, Charlotte, much more deeper, new systems and things to be in place in order to have a proper, audited ESG reporting in place. So yeah, so it's complex, but it's a very welcome sort of mended. And I think the first thing we talked about was so many frameworks out there are happening. This is a welcome opportunity. If the 30 jurisdictions are saying yes, we're going to implement them, I think it should be taken as a positive step forward. Thank you.
Thanks, Ange. And Thomas, I suppose on the regulatory side of things, what are the regulatory implications that you see for the new standard regulations from a digital perspective?
I mentioned earlier that a digital ESG report is just a paper report with added XBRL tags, but of course that's the essential step, and it's actually the only one, the only regulatory requirement currently being considered for digital aspects. Or to be precise, with ISB is not strictly a regulatory obligation yet. Because the UK and other jurisdictions are taking their time before making it mandatory. However, in the EU, with different but related framework, which are the ISRS, the European Sustainability Reporting Standards, it's a requirement from the CSRD, at least for large listed companies called Wave 1, and from probably year 2027. Even there is no exact date yet, and we know there are discussions about delays and postponements. So the official requirement is just to add tags, but in reality, the report needs to be structured differently for digital consumption compared to traditional physical reports. So if there is a requirement for having a report and a digital report, you probably have two steps: to have the data needed for the report and have it organized in a way you can tag it. That's because tagging means working with structured data. And even if the XBRL technology provides some flexibility in the data presentation, just as Ange said that the standards give flexibility about the presentation of the information, but when you're using a technical dictionary, you need a direct mapping between the physical and the digital report, because it's the same information that's present on the screen and in the tagged information. And if a report doesn't provide the same level of detail as required by the standards, it cannot be fully tagged. And I think you can now see my screen with a small example. It's an example from the ISRS framework, because it's more in use, and also because the ISSB approach make it industry standards, and so there are some variation depending on the industry. But you see on this example that if the information is given with too much detail, like it is for the subdivisions that are displayed for petroleum, and we have the numbers there a bit lost on the screen, but you see that those numbers 10, 17, 14, and 21 would go in the tag in red, but as the subtotal is not mentioned and only the subtotal is in the official dictionary, you will never be able to tag it. While probably the number for the non-renewable electricity purchase originating from fossil fuels can be tagged, so that's the number 21, can be tagged in green, and you can find the information on that presentation. And if and only if the issuers is respecting the correct and the standard definition for it. So you see that it's not only taking the information and saying, no, it's digital, but you also have to think about the way it's presented or designed to make it fully digital and make it much well understood by everyone. Another key point, if the overall total isn't provided, and it's not in my example, then it wouldn't be tagged either, and then you lost all the controls that you could have in the digital system. So because we have this digital requirement, it's also bringing some check on accuracy of the reported data if we present it fully in a way that could be controlled by the digital system. So the impact of digitalization means more standardization in the reporting, but it also brings more comparability, better alignment with definition, and it will help to really take a decision when investing or considering to fund a company. That was for my example. Thanks.
Obviously, we know that this is being implemented globally. Which countries are the new rules now live, and where is it looking to go live this year, and also where is it not being implemented? And I suppose, I guess, an additional question that maybe can feed on after that: what are the interoperability considerations for preparers who are applying across multiple standards?
I can briefly take that if you like. So the jurisdiction-wise, it's, I think, nearly now 35. They're changing very fast, Charlotte. They come in very quickly. So if I said 35 today, it could be 34 next day. So what do you mean? You're going backwards, because Canada has announced that they are not going to implement the mandatory disclosure. That was just before Mr. Carney became the Prime Minister, by the way, this morning. So it might go back to it. We don't know. But I think, 30 plus jurisdictions have announced that they're going to implement. We are working with, say, US and Australia, for example, who has implemented mandatory disclosure, Hong Kong, Singapore, Brazil, Japan, and there are lots of other countries across the world. Interoperability, very interesting indeed. If I think Tom and Mary, you would kind of know the ESRS E1, the old ESRS E1, not the omnibus, had a clear document published working with the ISSB, which was the IFRS S2 and ESRS E1 interoperability. And I think what I'm hearing, and I think Thomas will know more than myself, is there is a sort of news around that the EFRAG is proposing, or some EU parliamentarians are saying maybe we should align more with the IFRS and ISSB going forward to an omnibus. So I think that interoperability is absolutely necessary, because otherwise you're going to create so much burden for issuers for the similar kind of information. So I think the one thing people have to kind of think about it, what is the goal here? The goal here is to understand short, medium, long-term impacts and vulnerabilities of these so-called ESG issues on the company's, future cash flows, the impact on the wider kind of stakeholders. If you look at that basis, I think we should be able to create one clear global standard. That's the goal. But I think, Thomas, you're smiling. I'm sure you have a specific view, or Mary yourself. Thank you.
I like to have the one global standard. So because we have one global technology, what is interesting is that in any approach, XBRL or different versions of XBRL, but mainly XBRL is used. So there is possible technical interoperability. The question is really about, is it the same standard and the same things you need to report and the same definition for those items to be reported? As you said, it's not yet the case. It may go a bit better. I think indeed that the movement in Europe to simplify will also keep the essential, and the essential are the numbers that are also presented in ISSB or SASB or GRI, because those are probably those which will move the less, that will be kept. But I'm not a EU member of parliament, so, or member of IFRAC, and it's probably a long path and a long time for discussion to come to an updated standard. The only thing I wanted to say about the technology is there are different standards. So unfortunately, there are different taxonomies, different dictionaries, and even there are efforts to make them, I wouldn't say interoperable, but linked, or to do some mapping between them. There will still be a bit more difficulties, not because of the technology in this case, but because of the standard. So that's why indeed ISSB with the I from international is probably really interesting to follow. And at least what we know is that because it's the same technology, a company will always be able to convert its report in XBRL and include the different numbers with the different tags, even if it has different dictionaries and different labels on the same numbers. It can help to speak to the different users.
Thank you, Thomas. I suppose feeding on some question around where we are currently in the global picture. What about the UK specifically? Where's the UK on its roadmap to ISSB implementation? It's probably one for you, Anj.
I mean, UK is going to possibly call it the Sustainability Disclosure Standards. And I think just like Australia is calling it AASB and ASRS. Why two? I don't know, but they're fine. They are S1, S2 there, actually. There are 148 requirements and 102 are mandatory in Australia, for example. So I think UK is going to follow something similar. Each jurisdiction is doing that. Hong Kong is calling it HKFRS, Singapore is something, SG something. And what's being done, Charlotte, is it's been kind of localized in a way. Not exactly. They're taking the S1, S2 standards and pretty much implementing it for most of it. But there are certain things like scope 3. Scope 3 is very complex. We do this for many large companies with complex supply chains. We have a FTSE 100 company and they have 100 suppliers entering data into our platform. So I know from a personal experience how challenging scope 3 is to calculate 15 categories of scope 3. So I think what happens is here I'm hopeful, I am confident. I'm not making a big prediction, by the way, please don't hold me to it. I think during London Climate Action Week, it's very likely that the UK government is going to announce something. And from 1st of January next year, it may be mandatory for certain companies to begin with. That's what I see. And I think given UK wants to be the leading green finance center of the world, I think UK will take a sort of pragmatic approach here in this sort of sense. But because of the political changes and the kind of pushback, it could be delayed further. I'm not sure. But last I heard was the consultation took place and the goal is the FCA said they're behind it, the FRC. And I think, Mary, you can kindly talk about that. Thank you.
Yeah, absolutely. I mean, alongside Thomas, we sit on the XBRL UK committee, and it's certainly something that they're encouraging. Of course, as always, we are some time away, and we're very much focused on the digital reporting side. We think it's inevitable that we will have the ISSB tags incorporated into the FRC taxonomies. Timeline, of course, is very much up in the air.
Thank you both. So I suppose moving on to digital innovation in ESG reporting, Mary, how can digital tagging help companies with the structure of their ESG reports?
I think it's quite an interesting conversation, because when we think of financial digital reporting, the taxonomies came after we had the kind of standard reporting mandate in place for quite some time. Whereas with ESG reporting, we have the digital taxonomies at the same time as the reporting mandates coming into play. So there's a unique position that companies are in where they can utilize the digital taxonomies in order to create the layouts of their ESG reports, similar to what Thomas was speaking about a while ago. However, I am quite conscious that digital financial reporting has been around in the UK for the last 16 years this year. It has been around in Ireland for the last 12 years, in other jurisdictions in the EU. For main market listed companies in the UK and across the EU, they've had to mark up their financial disclosures for the last 4 years. We've just finished our kind of main filing period of the 4th year. So financial teams are very familiar with digital reporting. However, we realize that for a lot of sustainability teams, it's going to be a new concept, and a lot of which may not see the benefits straight away from digital reporting. So what I've actually pulled up, hopefully you can see my screen now, is an example of an output report. So the digital report should retain all the functionality and should look like when you open it on your web page, just like the PDF that you've created in-house or by your creative or design agency. However, in order to make it digital, a service provider or someone in-house in your team will go and apply the tags to the report so that some of the data becomes machine readable. So what I thought I'd do is just take you through an example. This is actually the London Stock Exchange annual report, which we tagged this year. But what the team have done is actually added on a couple of the sustainability tags to it that are available in the existing UK self-taxonomy. So when you open it up, this report is not the actual digital report in the sense of the report that you will share with your regulator or publish on your website. And this is the main report that we would send to our clients to review the application of the tags that have been applied. So when you open your digital report, you won't have this inline viewer, but we provide a copy of this to all of our clients. So when you open it up, it'll open in a web browser. This viewer will appear on the right-hand side, and that's where you'll be able to see any of the tags that have been applied to the report. So if I use arrows to go down through, what I'm actually going to do is just go down to the sustainability section. So we've applied a number of tags here. You'll see that these have been highlighted in the report. If you click on the value within the report, you will see the information that has been applied to that value. So if somebody was using the digital element of the report and extracting information from the digital side rather than reading the report, this is the information that they'll receive. So you can see that the concept that has been applied, and this is from the, as I mentioned, the UK self-taxonomy, is energy consumption used to calculate emissions. This is the date that the value applies to. So this is the current year of the report. This is the value that have been applied, the accuracy and the scaling. So if, for example, this was in millions or if it was in thousands, that's where we're at our scaling in. And it will automatically calculate our percentage change if we've tagged the value for the prior year. So when we provide this back to our clients, they go through these one by one to ensure that they're happy that the information here is a reflection of the information in the report. But to go back to, let me just click on one again, sorry. Go back to how useful this information is. These tags are from what Thomas has already mentioned is a dictionary of tags. Some of those dictionary of tags have tens of thousands nearly disclosures within the dictionary of tags. So you do have to be very familiar with what options are available to tag. But they're a very useful tool for when you're creating the layout of your report. And something that we're working with Ange ESG 360 team on is ensuring that the layout of the report factors in your digital output, because your digital output, ISSB will become digital, IFRS will become digital, GRI are releasing a digital taxonomy in the next couple of months. So considering these early stages will lead to more efficiencies down the line. And if anyone would like to see an example of that report, we can share a link to it after the call.
That's great. Thank you, Mary. The next question, which I think will be something you'll all want to jump in on because it's a big one. What is the role of AI and technology in all of this? I don't know who wants to start with that. Perhaps Ange will start with you and then kind of work our way through.
I mean, AI has a big role in sustainability. I had the pleasure of presenting at the Innovation Zero conference today with one of our clients, Menzies Aviation, and Glasgow University, because we're doing a case study with them how AI can be used in sustainability disclosures, actually, and looking at things like materiality assessments. And AI is not the panacea, and I think the way we employ AI is it's like a co-pilot. So what we're using AI for creating, extracting, lots of information from various documentations, including what Mary just kind of showed, as the partnership we're going to talk about in a minute with ARC. But there's lots of documents. You've got Excel spreadsheets, you have PowerPoints, you've got PDFs, and they're sitting in different silos in organizations. So one of the things AI does really well, it can extract information. But what we've done in our platform is we have created kind of questions around sustainability reporting expected by either ESRS or IFRS, for example. And these are not like copied and paste questions. This is actually, we've looked at specifically what is required by these standards. So for example, IFRS never says what is this or what is that. They're saying an entity must do this, and an entity is required to do this. So what we've done is we looked at exactly what is being asked. And as a matter of fact, if you look across a lot of these frameworks, they're quite asking quite similar things. So we had to do that kind of hard work, and that is not AI driven. That's very much a human expertise driven. But what AI is doing, then extracting information from existing documentation of customers we work with, prospects, and it's then matching and filling those gaps. And then it gives you a clear sort of gaps around, for IFRS governance, strategy, risk management, metrics, and targets, for example. We also have an AI assist where people can go in and use AI assist to ask specific questions on their disclosure, comparative information. But again, what we decided against was the automatic applying of AI answer. And the reason for that was the organizations we work with, large financial institutions, large corporates, they were very clear that they always wanted somebody in the organization in charge. And this is how I think AI would work really well, where the AI tools are supporting the human expertise. It's a huge step forward in productivity. So if I look at one of the financial institutions told me that they were spending over 200 hours actually collecting 39 inputs from across their business. We literally have cut that by 80% because of what I just said. But it does not negate the control of a human expert coming in and deciding what narrative should be published. In the future, I think it might go a different way because every time you feed the model, it gets clever. So we have 3 or 4 different models working with each other, looking at different things. But I do not see organizations simply implementing AI narratives because there are issues around legal liabilities. If something goes wrong, is your insurance is going to cover it? There are lots of issues you need to consider. So it's not simply replacing the humans by AI. But as I said, overall, productivity-wise, I think if you're smart, you can provide a lot of gains. So what that means is the human experts are free to add value to their organizations rather than spending time on chasing data and trying to make sense of this. I hope it makes sense. So I'll hand it back to you. Thank you.
Thank you. And how about you, Mary?
Probably a different viewpoint I'm coming at them, and it's a question that we're asked a lot by our client bases. Surely AI is going to tag my report for me. And I'll probably take a different stance than Thomas, and I think Thomas is going to speak to the use of AI in the output report. AI, I think there's great functionality out there when it comes to the tagging of your financial report. ARC, we have our own software for tagging of some reports. We also use external partners for the tagging of some of the glossy reports. So we're tech agnostic, and we know that there's great functionality out there with AI included to help you assist in the tagging of a report. What I would say is that the taxonomies are changing nearly on an annual basis in some cases. The regulation changes, certainly for the likes of ESEF, which is the newest regulation that came in for financial statements for main market listed companies across the EU and in the UK. That changes on an annual basis. So you can certainly use AI to guide you with the tagging of the report or the initial stance of the report, but you still need to ensure that you're using the most up-to-date technology and that you're capturing any new guidance of the regulation. So we use it in-house to an extent to do maybe some of the initial tagging of a new report, but we still very heavily rely on humans to go in and ensure that it is tagged accurately. I think something that is sometimes lost, and because the tagging is the very last step of your annual report publication process, is that it's not considered as important as the text that goes into your annual report, but it's equally as important. And what we'll see in the years to come is that more and more stakeholders will start using the digital report because of the efficiencies and the time saving by using the digital report than going and reading the disclosures in the PDF version of the report. Is that more emphasis and more ownership will have to go onto the digital elements in your report. I think, Thomas, you're going to speak to around AI and the output reports.
Yes, indeed. And I would say that people might think that AI is enough to find, extract, and explain the information from a report. But unfortunately, the result depends a lot on how the system reads the report and understands the report. And with numbers and text on really specific information, it's quite tricky sometimes. And that's why the tagging exercise is a big question we have at Expel Europe, and Mary spoke a bit about it. You can use AI to help you, but we see that we still have results which are not as good as we would expect. And I think we will see now in the screen the figures from a recent university study on the AI error rates for accounting data. You can imagine it's the same challenge for ISSB or ESG data. The point is that if you just have figures in a table without any context, then you see that nothing is understood by the machine. And I would say, to be honest, I'm sure that nothing is understood by many readers in general if you don't have the context. So the idea is to add more context to be really clear and easy to read in the system. And adding text first, context, and then tags will help. If you just add text, you see that the error rate is still far too high to make decision for investing, to do reliable investment decisions. And so adding the tags will give a structured data. So you have structured in presentation, and in this study is what they say with HTML. So it's structured by tables. So you see, we already have a better understanding by the machine and by the humans as well. It's the same at the end. The more information you give, the best your message is understood. And if you add XBRL, which give a tag with the exact definition, which is sometimes much more interesting and complete than what you can have in the simple label, which are often abbreviated or short text to just give the information, but not fully clear about the full content, as you can do in an electronic tag. Then if you add the tags, then you see that the error rate can be divided by 2 in primary statement for financial information and by 4 in the notes. So let's see that for ESG data, the approach is closer to the notes than to the primary financial statements. You get a much better result in the AI reading of the information. Still not so good if you look at this study, but as Anne said, there is also a need to learn from the more and more report and more information, and for those structured and tagged information, so that we can trust the machine to do better with time. But we see that if there is no information around the numbers, nobody, not the human, not the machine, is able to understand clearly what the numbers stands for. And so tagging allows to issuers to ensure their reports are properly understood, because they give the full information what the numbers they report. And to investors and analysts, it gives also it helps them to be sure about the meaning of the figures they are reading. So it's really improving the communication. And then AI analysts can work better.
I would just like to add quickly to that is, so that was one of the key decisions we had to make for ESG 360 Air platform. And I think the tendency would be we can extract information and populate these narratives automatically. So what that means is, as user, you go in as head of ESG or your team or head of finance, CFO, whoever that person is, you go in and you see the requirements that are assigned across the business, and that's one of the kind of things we're doing is the governance side, because all the narratives is wonderful, but if you don't have the governance and the accountability across the organization, that's the biggest challenge, by the way. Especially with, as Charlotte, you ask, sustainability reporting becoming like financial reporting, it will require that sort of level of, change of accountability across the business throughout. So one of the decisions we had to really make, and we had a lot of debate in the team. One view was we could just automatically populate the questions. We decided against that, actually. So what we've done is, when you go into the platform, although we might have found 190 answers out of the 100 and something requirements, but we don't automatically apply. We always want somebody who's accountable to go in, look at the AI answer, which has been, by the way, gone through a kind of process through ourselves and expertise, and then decide whether this is the right answer before applying the answer. Because we thought if we simply automatically apply the answer, the human tendency is, you're busy, you got to get this done, and you say, yep, that's good enough, and I'm going to go with that. And this is where I think organizations need to be very, very careful using these tools, because AI can, yes, produce a lot of the answer, they can add value, but I think ultimately it's the organization and the accountability which is in control of this. So we have made sure that is throughout. And then we have an internal audit functionality, which then comes in and checks these answers like human experts from risk and audit teams. And I think if you don't have this level of governance and structure, you're bound to find challenges around that. And for this reason, we're also highlighting, we have a greenwashing tag, a sensitivity tag, a decision useful tag for each requirement. So you treat each requirement as, quite an important issue rather than simply a tick box compliance. So it's a different approach. I don't think many organizations have done that this way. Some of them, large ones, would have. So, but I think this is where the IFRS S1, S2, if it becomes mandatory in the UK, this is what change is going to drive. And we hear that from the senior stakeholders. Thank you.
Thank you, Ange. And yes, it sounds like overall AI, powerful tools, still important to have that human lens as well on top of it. I think this sort of leads into my final question before we kind of move into the Q&A portion of this webinar. And this would probably be one for Mary, kind of touching around, as companies adapt to their financial reporting systems, how can they capture more transparent sustainability data?
So again, to come at this from the digital reporting and iXBRL side, the purpose of iXBRL is to make data more transparent, more accessible, more comparable. And the chances are your finance team already do iXBRL reporting. It's been mandated, as I said, for HMRC for the last 15, 16 years in the UK. We also have Companies House who are going to be mandating iXBRL reporting for all submissions over the next couple of years. And then we have the mandate for UKSF or ESEF for all main market listed companies. So your finance team, no doubt, already have processes in place. They already have a supplier in place doing iXBRL reporting, or they may potentially do it in-house. So from an ESG standpoint, I think it's definitely worthwhile opening that conversation with your finance team to see what their processes are, and if it is something that you can leverage off the back of when it comes to looking at the digital taxonomy to help create your disclosures and then ultimately tagging the report. It may be the case that what your finance team do is not going to be the right way for you to continue with your digital ESG disclosures. ESG, I mean, as I said, ARC, we've been around now 16 years. ESG tagging is a very different beast than financial reporting tagging. With our team, and I mean, I'm here 9 years, and our team all are here kind of 7, 8 years, and around that time. Even with that experience, we still need assistance when it comes to ESG reporting, and it is very much a new beast. The taxonomies are very different than anything that we've worked with previously. So given our experience, we're doing a lot of training, a lot of research, and we're partnering with the likes of Thomas and his role in BM&A, and they're helping us tagging with the tagging decisions on some reports. So it may be the case that your finance team are doing tagging in-house and you may not have the resourcing or the capabilities to tag your ESG reports in-house. So maybe a slightly different approach. So it's certainly something that you need to consider when it comes to the digital ESG reporting side. But if I was giving anyone a piece of advice when they're talking about their ESG reporting, is have a look if you're reporting against ISSB, GRI, ESRS, have a look at the digital taxonomies that are readily available out there when it comes to creating your report. Have a look to see how you can apply them to your output report. Even if you don't actually do the actual tagging of your report, use them as a tool in creating your disclosures and how you label your disclosures in your report.
Thank you, Mary. So now into the Q&A portion. So just a reminder, you do have that ask a question feature on the bottom right-hand side. So if you have any questions, please do submit those. If not, I think we have a couple that have been pre-submitted. So perhaps while some of you are typing away, we can start working through some of those. So I'll open this up to the panel to kind of jump in on this one. We may have answered a couple of these already through the course of our session so far. One of the questions: when will the UK adopt S1 and S2? Will companies reporting against SECR and TCFD need to do more to comply with the IFRS standards?
I can take the second one. I think the first one we've already answered, really. Unless Mary and Thomas would like to kind of say. Mary, you're probably close to a lot of this stuff as well, so I think you probably can do a guesstimate there. In terms of the SECR and TCFD, I would say yes and no. It's a bizarre sort of answer. How can we yes and no together? Yes, in the sense it's more because you have to go much more granular, because there are specific now requirements. And as a matter of fact, this should not come as a surprise, because if you look at the June 2017 TCFD implementation document, which came out, and I was fortunate enough to be one of the first few people to implement TCFD in a FTSE 350 company, a good few years ago, actually. This is 2018, actually, 7 years ago. And if you look at the document itself, and it's gone through some revisions, it was asking for a lot of detail. And what happened is companies have not reported the detail for various reasons. I'm not sort of pointing fingers here, because the market, that's what the market wanted. That's what the investors wanted. So it was very much a narrative-based report. So if you open any listed company report, you will see anywhere from 2 pages to 6, 7 pages on kind of TCFD. What's happened now is TCFD becoming part of the IFRS S2 specifically. It's asking for very detailed, granular information. So if you're saying, I'm going to be net zero, I'm going to reduce my emissions, it's saying what is your capital allocation? What are the risks to your plan? How are you going to decarbonize your business over a certain period of time? What are the IS 37? So they're looking for connectedness. They're looking for interconnectedness between these disclosures and the financial reporting as well. So it's very much, as I said, going towards financial reporting. So obviously they're gonna ask for a lot more detail. In terms of if you have done SECR in detail, and if you were the company who really went ahead and did scenario planning and had a clear sort of understanding of what scenarios, whether they're SSPs, the shared socioeconomic pathways you use, or you use IES scenarios, or you use NGFS scenarios, Network for Greening Financial System, by the way. You would have a clear understanding of what the future impacts on your cash flows and the future prospects of an entity may be. So you'll be in a very different place. But if you're a company who's kind of massively only done qualitative, you will be required to go further down the track on this. And as a matter of fact, that's the reason why they exist. The evolution of IFRS S1, S2 is because of the investor demand and the market demand, that we really need to understand, the short, medium, long-term impacts of these issues. IFRS S1, it's still in its kind of infancy. It's kind of asking you broadly to report on these things around sustainability risks and opportunities. I think that will go through further evolution. And as you perhaps know, the IFRS S3 people have talked about, I mean, there's no official guidance there, but ISSB announced only a few days ago, actually, that they have this kind of pact with the TNFD, the Task Force on Nature-related Financial Disclosure. So I think what I'm trying to say is how you were reporting, if you were purely focusing on qualitative in the past, I think you'll have to go much deeper into the quantitative. But the good news for you is that there is a clear guidance and requirements being laid out to you, what you need to do and how you need to report it. Thank you.
You. And then, and on the interaction between S2 and other sustainability matters, what question here, what does that look like for the ISSB?
Sorry, I apologize, I didn't get the question there.
An interaction between S2 and other sustainability matters. What does that
I mean,
look
S2
like?
is very much focused on climate, you know.
Yeah.
S1, yes. I mean, if you're doing IFRS S1, the CSRD or Omnibus, whatever it's going to kind of end up with, it has a lot of commonalities, obviously. And they started with the ESRS E1 and the IFRS S2. That was the kind of only commonality. So there was a stance that if you do this, you automatically, you know, you do either with little tweaks, you automatically comply with both at the same time. But just to remind you that ESRS has a good number of other, you know, across ESG, there are quite a lot of them. So IFRS is not there yet. The IFRS S1 is kind of broadly covering all the other ESRS except E1. In the CSRD, but as I say, in a very sort of broad terms. So I think whatever happens with the CSRD and the Omnibus, it's possible that we will have a lot more interoperability across these two to get some more, you know, clarity. And I think that clarity is, as I said, I'm very passionate. I think IFRS S1 is I'm a big fan. You would have noticed by now, but I think it's needed. That sort of clarity is absolutely needed for companies and markets. Otherwise, confusion sort of creates this opportunity to have qualitative narratives.
Thanks, Ange. I think that leads nicely onto my next question, which potentially would be the last one we have time to cover, though I've got a couple, so I'm going to try and group them together because I think they're related. Question, will there be one reporting standard? And then, as you mentioned, CSRD, how do CSRD and ISSB align? Which of the two will eventually be seen as the global standard? And feeding on from that, any changes to ISSB due to the EU Omnibus? So a couple of different questions there. I'm going to suggest, starting with you, Thomas, if you have any thoughts, changes on ISSB related to the EU Omnibus. And will we have one global standard?
We partially answered to that in previously, but I would say that there will be one change probably coming from the ISRS to ISSB is the speed, because it slowed down or it even stopped the clocks in the EU. I'm sure there will be impacts on the other frameworks and other decisions. Even some people may say, and are right to say, that doesn't stop the impact on the climate. So we cannot stop forever. But as Ange said, it's no need to report something if it's unclear. It's even bringing more confusion. So it's completely inefficient. So better to be really clear, and probably, as it has been said as well, and that's the other change that we can see, but probably not ISSB changing because of ESRS, but ESRS changing because of ISSB. ESRS is really well designed, but much too complicated is what we see, and that's what they decided to stop the clocks. Some people, it's too much effort. And so I think we have to come back to something everyone understands and to find priority in this. As it was said, ESRS is much broader scope than it is with ISSB S1, S2. But however, it's also much more information to display and sometimes not really urgent information. So we have to have this, and it's not only about interoperability, it's also about common understanding. And I will just finish my answer by the first part of your question, that was, is there only one reporting standard? There will never be only one reporting standard, because there is not one reporting language, there is not one industry metrics, there are more than one. So even if we all go to the same standard, there will be differences for the companies, for the countries. So, but the important thing is to have only one definition for one concept, or one shared definition for one concept. That's what we have to get with the new standards. They were developed really quickly if you look at them compared to the one for accounting, which took probably, it took 500 years to get a IFRS. text, while accounting was existing in many countries much before. It went much quicker for sustainability, but then we need a bit of time, and I think there will be interactions between the two to have a similar understanding, and then technology may help to have also a similar way of tagging it and using it, and that's really grateful.
Thank you so much, Thomas. As we are approaching the end of the session now, I think it would be great if we could finish up with just one key takeaway from each of you for our audience on or about to embark on their own journey to comply with ISSB standards. So, Mary, perhaps if I could start with you and then we can.
Yeah, of course. I think it's similar to what I kind of left my last comment on, is consider the digital element. It is going to become mandatory that you will have to report in digital format eventually. So considering early in your journey is going to lead to a lot more efficient process down the line. So look at the digital taxonomy, even if you don't actually do the tagging this year, look at the digital taxonomy and consider it when creating your disclosures.
Thank you. And Ange?
I think I'll just kind of quickly mention that a couple of things we will offer because of this kind of tool we call AIR for ISSB aligned or sustainability reporting line. We're going to offer for next 60 days a complimentary assessment to any company, any listed company in the UK, which would like to give us their existing standard. We can take it from their publicly available data, and we will give them a full gap assessment of where they are with these standards actually for next 60 days. So I think we'll send an email and provide the details. Second one, we have basically a special kind of project offer for companies working with ARC. So the first 20 companies, for the first 20 companies, we're offering a kind of full access to our platform for next 12 months with digital tagging around kind of IFRS S1, S2. But as I said, it's limited to kind of 20 companies. So I thought I'd mention it because we love to have some examples, people using the technologies and giving some feedback, but it also provides an opportunity for companies to see what digital tools are capable of and what kind of digital tagging looks like. Thank you.
Hey, Thomas.
I will try to join the two messages from Ange and Mary. So yes, indeed, it's important to prepare digital as soon as possible, maybe in the 20 next days, if I understood well. Oh no, in the 60 next days or in the 21st one to answer. But I would say that it's even if you don't go digital yet, just keep to the standard, write in the margin the reference to the standards, because you will see that it's really smoother for preparing the report. It's smoother as well for auditing the report if needed. And it's also at the end much smoother, as Maria said, to tag the information, because what you will do is just to transform that small little unscript in the margin into a technical and standardized electronical tag that can be used. But that's the idea of doing sustainable reports. That is available information about sustainability, but also a digital process to make it easily used.
Thank you so much. And thank you to Mary, Ange and Thomas for joining us for this webinar today and providing such excellent insights. A final note or reminder to the audience, as Ange just referenced before, ESG 360 will be offering a full complimentary assessment of alignment with ISSB for any issuer who's interested in understanding their current gaps for the next 60 days. ARC and ESG 360 also have a combined special offer for the implementation of ISSB standards, which includes digital tagging for 20 companies on first come, first served basis. So please do get in touch if that's something you're interested in. And lastly, a big thank you to our audience for watching.